Alrighty traders, this is Blake Morrow and you are listening to the week ahead video for July 19th, 2020. I hope everybody's having a great weekend and I hope everybody's excited for possibly a really busy week next week. The reason why I say that is I think the market is at a huge inflection point, especially in currencies, and there's a big event that's happening right now as I'm speaking. So we'll talk about that here in a second. But before I talk about it all, I have to mention if you have not tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. $1. 10 days. You get to try it out. You get to try out the actual premium version. You can choose the light version after your 10 days, but you get to try out the premium version. That means you get all of the features of ForexAnalytix. You get the mobile app regardless. It comes with either version. You also get to jump in the chat room if you want. You can get this data flash over here. You always get the data flash. By the way, the data flash shows you what news is upcoming, and as soon as it's released, it pops up here. It's pretty awesome. You've got everything from a news feed from Live Squawk. You've got an integrated Twitter. You've got money management tools. You've got all the different analysis for all the currency pairs. Whether it's basic technical analysis, harmonic analysis, Elliott wave. You might be looking for a butterfly pattern, or it's all of it's right here, and it's all available to you for just $1. So try it out. All right, so let's talk about what's happening this weekend, and and I'm going to actually draw on my charts because I think we're at such critical levels, and I'm going to leave it right here for a second. And remember, you get all this analysis here, not necessarily mine because I don't do the basic technical analysis over the weekends. I do it throughout the course of the week. So the analysis that you get every evening at the end of the day is always going to be mine, unless I'm taking the day off or whatever. But you're always going to get my analysis throughout the course of the week. And a lot of the intraday analysis that you'll see through here comes from either myself, Paul Franco, Amanda, Steve, so we were constantly as a team uploading analysis throughout the week on all of these different instruments. Anyway, I'm going to actually draw on my own charts. This way I can, help better show you what I'm trying to express to you at that moment regarding what we're discussing. So let's talk about what's happening this weekend regarding the European Union. So there's an EU Council meeting about the COVID recovery fund, and from what I'm reading, it is really it looks like they're still at a deadlock, and I know it's starting to get later in the day already in Europe, and the fact of the matter is if they don't come to an agreement on 750 billion euros, which is almost a trillion US dollars, and then a loan or grant function that's around 400 to 500 billion euros. If they don't really come to the agreement on those numbers, on the actual numbers, and they have to push off or have a continued meeting, whether it's a week or 2 weeks or a month from now, that's going to put a drag on the euro. And the euro is pushed up against really key resistance. As you can see, we have a bull flag pattern, and we closed near the highs of the week. And if you look at where we closed at, here's the breakout point. You can see on the daily chart, we actually closed below the breakout point, which is a risk for the euro because I still think that the euro is going to be a buy on dips type of situation. That means you want to be a buyer because look, the European Union, between even you look past the four countries that are, they call them the frugal four, that are actually opposing, and it's a negotiation process. And the fact of the matter is the European Union will come up with some sort of solution. So the euro, even if it pulls back a little bit, is probably going to be a currency pair that you want to buy. However, that doesn't mean that it won't have a setback, and that could definitely be the case. And it's not just because of the euro, it's where everything else is at. I want to take you over to the dollar index. The dollar index is really pivoting off of a major trend line. So this is the dollar index, and this is you can see the low here from early 2018, right? February 2018 through the spike low. This is the shutdown spike low, and then you can see where we're at, right? This is where we bounced off of Wednesday. We came really close to this low right here at 95.75 roughly. If we don't break down through this support, okay, that means the euro doesn't go higher, then we're going to get what you call a double bottom, or a possible double bottom. We're going to get a rally past, excuse me, we're going to get a rally past this trend line, and then a possible break of this resistance. And if that happens, then, you know, we do get a double bottom move to, you know, about 100 again in the dollar index. That's possible, you know. And if you think about that, where does that put the euro? That could actually put the euro not here. You could actually put it a lot further lower once again. Now, again, I'm really kind of expanding out here on where we could go, but if we crack this trend line, this downtrend line, you're going to get a lot of people that are short the dollar in different shapes or form, whether it's through the euro or through the cable or whatever. You know, you're going to get them covering. So keep an eye on the dollar index, especially if we get back above 96.50. Okay, 96.50 or below 95.50. It's where these are the breakout points for the dollar. Okay, below 95.50 is very bearish. Back above 96.50, we're going to get a squeeze. You know, how far does the squeeze go? And that has more to do with economic data, risk aversion, risk appetite. You know, economic data moving forward. You know, it's hard for me to try to gauge all that, but I can tell you that near term, you know, when we're talking near term, between probably now and next week when I film the next week ahead video, if we come through this trend line, we're gonna squeeze probably back towards this resistance. That's what I would think. All right, so let's talk about what other currency pairs are at key levels, not just the euro, right? Let's talk about the cable. So the cable is up against, you know, this trend line, the 200-day moving average, which if the euro broke higher above resistance, you know, if the euro broke above this, you know, 114.50, and we really started break through 115, and the bull flag played out towards 118, the cable would break through 127 and the 200-day moving average. You know, if the EU comes to an agreement by the end of this day, today, Sunday, that's probably what's going to happen. You're going to see the euro through 115. You're going to see the cable rip through the 200-day moving average, and we're going to squeeze back towards 130. But, you know, at the same time, if the EU can't pull their crap together, oops, I didn't want to move that, but I'll delete it. No big deal. Okay. We could actually reverse lower here in the cable, you know. I mean, from a risk-reward perspective, the cable's a good short. From a risk-reward perspective, I'm not saying I'm not short, so I'm just saying that, you know, because you know where your risk is. Your risk is above the 200-day moving average and this trend line. So, but if the euro does fall, that means the cable's probably going to, you know, follow suit. Now, is it going all the way back to 120? Probably not. I mean, you know, back towards 124. Yeah, I mean, it's realistic. All right, let's talk about the Aussie, the Kiwi, Canadian, and peso, and then I'm going to leave it at that. And then I'll see you on the F.A.C.E webinar tomorrow morning. Here's the Aussie. Aussie, huge resistance at 70.30 to 70.50. You know, 70.50 or 70.60 being that spike high. Look, we tried to break out of this, you know, this triangle. We tried to break higher out of the triangle, and the fact of the matter is if we reverse through here, through 69 cents, actually 69.20, which would be this horizontal support right through here. All right, we break through that, you're going to have a big double top setting up, double top, reversal. Now, if the euro breaks through 115, my opinion is the Aussie is going towards 74 cents. We're going to break out, right? So again, this is where everything kind of hinges on what happens with the EU over this, you know, the next probably, as I'm speaking, probably in the next 6 hours, 6 to 10 hours. So by the time you're watching this and the FX market is opening for the week, we should have a better clue on what's happening. Anyway, here's a Kiwi. Same thing, right? Multi-year trend line. So since 2014, right? 2014 trend line, we're above it. We have a little cup and handle pattern developing. A break above 66 cents is very bullish. A break below 65 cents, which would be right here, break below 65 cents would be very bearish, right? And the relative strength is divergent, by the way. I'll delete that, but it's divergent. Okay, now let's talk about the dollar CAD and let's talk about the US dollar Mexican peso. So if you want to see two currency pairs that are really diverging away from dollar weakness, it's the dollar Canadian and the US dollar Mexican peso. So the dollar Canadian, huge rallies off the 200-day moving average. The fact of the matter is the dollar Canadian is actually acting really well. It's diverging. The dollar strength or the dollar weakness is diverging against these two currencies. So my opinion is if the dollar does turn higher, like you see the euro drop back, let's say the EU doesn't get anything done and the dollar starts to gain some strength this next week, the dollar Canadian above 136, 136.30 is bullish. Okay, that would be last week's high. So you can see right through here. This actually is 136.50, I think is what it is. But I'm actually paying more attention to 30. Okay, but again, the dollar Canadian's not selling off. You want to squeeze some dollar shorts? Well, they're probably going to get squeezed here because they haven't been paid as the dollar has been weak, right? We're also outside of this downsloping descending channel, and crude, in my opinion, crude looks like it could roll over. We're really rejecting $42 and $42. Remember, this is a big breakdown point, right? Low, 42 bucks comes in right here, and we're really struggling, and you can see the divergence here. So if crude rolls over, that's going to take the dollar Canadian higher with it. So I think we need to pay attention to the dollar Canadian higher, also the US dollar Mexican peso. This is another currency pair that has not sold off. If during a period of risk on, the emerging market currency should be rallying. Stocks are hitting all-time highs. Nasdaq's hitting all-time highs. Why isn't the dollar Mexican peso trading down at 20? I don't know. Your guess is as good as mine. Maybe it's because COVID is, ravaging through Mexico. Maybe it's because the market knows that, there's going to be a risk-off, phase that we go through, and emerging market currencies are going to suffer. Look, if the dollar Mexican peso breaks through 22, well, the trend line comes in at 22.67, but let's just call it 22.80. I mean, we're going to squeeze. And if you think about where we're holding, let's go over to a weekly chart really fast. That's a spike high from 2017. We ripped higher. We've paused, and there's a gentleman, a friend of mine, named Mark Chandler. You guys remember Mark? I'm sure you've heard him on our webinars, and he's with Bachburn Forex, right? I remember reading a post that he did somewhere back in March or April about the dollar Mexican peso he built the case for it. It could trade up in the 26, 28 level. Look, the price action suggests that is entirely possible. It really does. So there's more I could talk about, but I'm going to leave it at that. And I just want to say, for those of you guys, if you think that this video is going to be great help for you next week, give us a thumbs up. If you're watching us on YouTube, make sure you subscribe to our channel so you don't miss any of our webinars that we do for free throughout the course of the week. All the interviews, like even one with Mark Chandler that Dale brings him on all the time. Make sure you subscribe to our channel so you don't miss any of those, and all of our daily webinars that we do. And as far as next week goes, we do have like Canadian retail sales and some PMIs out of the Eurozone later in the week, but remember, it's all about this EU Council meeting that's happening right now. So I think that we're going to have a pretty good, bout of volatility going into this next week. Let's hope so, because as traders, that's all we want. My name is Blake Morrow. You've been listening to the Week Ahead video, and I want to thank you all for tuning in today. So have a great week. I'll see you tomorrow morning on the F.A.C.E webinar. There's a link to that webinar in the description here. All right, thanks.